Hello, everyone. This is Tanya back again. Thank you so much for your patience on this second video. I meant to do it sooner, but last week was the tax deadline, May 17. It's normally April 15, but they changed it because of the whole pandemic. So it went to May 15. Then May 15 was a Saturday, so then it was Monday, May 17. So I was a little busy with that. And then I got the second shot of the vaccine last week. And luckily, the only symptoms I had was I just got really tired. I was super tired. Like I ate dinner and I'm just like, I need to go to sleep right now. So that was the only symptoms I got for the vaccine. I just got really tired and the arm hurt like big time. But I'm all vaccinated up, ready to travel. I'm excited. And I wanted to give you a little insider tip on this deadline, this tax deadline that just happened. Maybe you know, maybe you don't know. But if you're getting a refund on your tax return and you don't file your taxes on time, nothing happens. You don't get penalized at all. Like nothing happens. You're not going to get charged any late penalty if you're getting a refund and you don't file your taxes on time. The only thing that happens is you just get your refund later. And that's it. The problem comes when you owe taxes and you don't file on time, because then you're going to get hit with the penalties, because the penalties are a percentage of the amount of taxes that you owe. So if you don't owe any taxes, nothing happens. But if you do owe taxes and you don't file on time, then you're going to get hit with late filing penalty, late payment penalty. And if you didn't pay your taxes like throughout the year, you can get hit with estimated tax penalties and interest on top of that. So those are four: late payment penalty, late filing penalty, estimated tax penalty, and interest. If you have a balance due on your tax return for taxes owed and you file late. So that's a little insider tip. If you're getting a refund, don't stress, don't worry. Obviously, you want to get your get your taxes done so you get a refund sooner than later. But yeah, there's no penalty if you're getting a refund. So that was a little insider tip. Now, let's move on to this part 2 of the financial statements. And part 2 includes the profit and loss statement. So just a little recap. Part 1, if you didn't watch it, go ahead and watch it. It's super short. But I'm talking about the financial statements. And the financial statements have 2 reports in them: the balance sheet and the profit and loss statement. And these are 2 reports that you prepare for your business, that you give to your tax person. And those are the 2 reports that they need to prepare your business tax return: your balance sheet, your P&L. So as a business owner, you should know what these reports are, And I'm going to share my screen again so that we can do a little review and also show you what the difference is. And I'm going to take this away so you can maybe I'll leave it. But so I don't know what that little blinky stuff is. That's weird. Anyways, your balance sheet. Remember, your balance sheet was your assets and your liabilities and equity, and they needed to balance. So this is a snapshot, a picture snapshot of what your cash is at a certain date, what your liabilities are at a certain date, and how it connects to your equity portion is how much money you made in the year, if you made money or you lost money. So that's your profit. Either you made a profit or you made a loss. And that connects back into your balance sheet. So to keep it simple, I'm gonna make this a little bigger. To keep it simple, obviously your assets need to equal your liabilities. And your liabilities and equity. And your equity portion is any investments you've made. And this is an example of an LLC business. If it's a corporation, this is going to say common stock or preferred stock. But when it's an LLC or you're just a sole proprietor, it's just your own investment money. And it's also a combination of your retained earnings, which is what have you retained throughout the years from your business? Have you retained any money? Did you make a profit? That's you retaining money in your business. Or did you make a loss? Are you in a deficit? And for this example, I'm just saying, okay, you know what? We made a $500 loss. So that connects to your P&L, your profit and loss. Look at here. We made a loss. And what is this? This is your income and your expenses of your business. And the difference between this, your P&L, and the balance sheet is that the P&L is for a period of time. So you've got January 1st, 2020 to December 31st, 2020. So it's for like the whole year. And normally, you do a calendar year, January to December. So this is the activity for the whole year, summarized on your P&L in buckets, in categories. So for the whole year, let's say you made $1,000 in revenue. Let's say you had some discounts. Okay, cool. So you made income of $950. But you've got to add up all your expenses. And, maybe you made maybe you put some money to advertising. You had to pay the bank some fees, maybe some licensing, some permits. Maybe you had some meals. And guess what? As a reminder, meals for this year, 2021, you can write off 100%. So this is 100% write off, which is awesome. Go to the restaurants, spend some money, help them get back on their feet and have some business meetings while you eat, how awesome. So also state taxes for an LLC business, you have to pay $800 a year minimum, no matter what. If you lost money, if you didn't even make money, but you had activity, you have to pay $800 a year to have an LLC. If you're a sole proprietor, you don't have that. You don't have to do that. But for business entities, you got to pay the minimum. So, okay, you made $950 in income, but you had a lot of expenses. So that's where the loss comes in. And this loss flows through to your equity portion of your balance sheet so that your balance sheet balances. That's why it's called a balance sheet. So it balances. So that's the simplified version. Simple of your financial statements. Your balance sheet and your P&L. Now we can get more complex. Remember, you could have inventory, you could have fixed assets, you could have intellectual property, you could have loans on your balance sheet. The same thing for the P&L. I'll make this bigger. You not only can have income and expenses, but you can have something that's called cost of goods sold or cost of sales, which is direct expenses that directly relate to making your money. So maybe it was materials and supplies that you needed to buy to build whatever you were selling. So that's like directly related to your product. So that would be considered cost of goods sold. Or any other direct kind of costs are considered your cost of goods sold. So this is kind of like in between the income and expenses. And because this gives you your gross profit. So your income minus your cost of goods sold is your gross profit. Now, this is where you say, oh, what's your gross margins? What are your gross margins? Well, that's a percentage of your income, you know? So this, you could say, oh, my gross margins are 16%. That's not that good. Actually, that's really bad. You don't want your gross margins to be that low. You want them to be like 80%, because you don't want to spend that much money on like the cost of producing your income. So that's really bad. But this is just an example. Then you've got your operating expenses, which is all the other stuff that could be more, it could be insurance, it could be postage, it could be rent, software, travel, your website costs, it could be more. It could take a lot more to operate your business, a lot more expenses. And, they just need to be categorized up. That's why sometimes it's really a nightmare for people to at the end of the year to add all this up. But if you have a software like QuickBooks or something, then it generates these reports for you. So then for tax time, it's super easy. Also, there could be other types of income and depreciation expense and amortization. And this goes in this other section, other income and expenses. Maybe you signed up for Chase checking and you got a $300 reward for being a new customer. So that $300 goes here in other income, because it's not really income that you're generating from your business. It was just kind of like a separate little other type of income. So that's where it can go. And once again, this net loss flows into the net income portion of your balance sheet so that your balance sheet balances. So there you go. Hope all that made sense. That is a picture of your financial statements. Part 1, balance sheet. Part 2, P&L. And as you can see, you can have a bunch of different types of expenses. And these are the reports that you give to your tax person, and they can do your business taxes with these 2 reports. Also, I think it's a great idea to do a P&L just for your own personal finances. You get to see where your money goes, and it's very eye-opening. I do all my expenses in QuickBooks, and I enter every transaction, and so I can see, oh, this is how much I spent on groceries this month. Interesting. Or, this is how much I spent in total for the year on traveling. You just can see where your money's actually going, and you can analyze things, and you can say, I made this much during the year, but 20% of my income or 30% is going to rent or something. It's okay, that's where most of my money goes. But you can kind of budget. You can see where you can allocate your money. So that was that. Let me know if you have any questions on your financial statements. Let me know if you have any questions on anything else that you're curious about. I will come back on here and inform you and let you guys know. From my background of being a CPA, certified public accountant, being a CFO, doing accounting, doing taxes, I'm in the mix. I know this stuff, so I can help. So just let me know. I'll be back, and hope you guys have a great rest of your May. Memorial Weekend is this weekend, and have fun. Hope you guys are having fun getting back out there and staying safe. All right. Talk to you guys later. Bye.